Big Daddy Jerome Powell raised rates again today, 0.75, highly anticipated and expected. There were talks a few weeks ago of 1% increase. Inflation is rearing its ugly head. Prices are going up, and there's one way to fight it. Increasing rates. Now, everybody keeps asking me, are we in a recession? I have no idea. I see the job numbers, and I'm like, the job numbers don't say we're in a recession, but some people feel like it. Consumer sentiment is so low. It's the lowest in history. The lowest in history. We're talking about 9/11. We're talking about the Great Recession. People are less likely to spend money over the next 6 to 9 months now than they were before when those things were happening with amazing job numbers. I don't get that. This is quite the conundrum for me because I'm sitting here trying to figure out, is there a recession or not? And then sometimes I think to myself, what does it matter? Well, it does matter to most people. But for me, somebody who lives well within my means and saves my money, and I have a secure job. If you have a secure job, because remember, the average person watching us has a college degree and is over the age of 25. The unemployment rate for them is so low, even during bad times, it's under 5%. Now, does that mean you shouldn't be cautious? Of course not. Still be cautious. The Fed is going to raise interest rates to fight inflation. That is how you fight inflation. Their goal, though, as I said, is to try to keep unemployment lower. That's going to be a tough one. Guys, low unemployment causes inflation in and of itself. When you have everybody out there working, they're buying more and more goods. You have to pay more money to get outlier workers coming in to work for you. It causes inflation to go up. So how are you going to balance both? How are you going to fight inflation while also keeping unemployment down? I think these are good words they're saying. And it might be like, hey, it didn't work. I just don't see how that's possible. Now, I'm not Fed chair. He has access to a lot more. I should say this. He probably has access to the same data that we have. He just analyzes it differently. He knows how to analyze it better, theoretically. But these are also the idiots who a year ago said that inflation was transitory. Well, they were printing out checks to everybody so they didn't have to work. And they said, oh, we don't know what happened. How did inflation pop up? There are now twice as many job openings as there are people looking for work. To me, if I'm the Fed, I'm taking that for a ride. I'm going to raise rates like crazy because we have twice as many job openings as people looking for work. We can have those job openings decrease, or have the number of people increase and still keep a good balance. That's the key I'm talking about here. Now, if you're out there and you're responsible and you live well within your means and you save your money properly, this is probably not going to affect you as much as it's going to affect others. Consider yourself fortunate, and that's awesome. And figure out a way to help people who need help. But in the meantime, for yourself and your family, be very happy that you live within your means. If you don't live within your means, now is a great time to start. When they're on the cusp of something like this, you're here to learn more about your financials, your finances, and about your financial future. Great. Just hang out here, learn, start to live within your means. It can start today. I've heard many people who went from credit card debt to within a year having massive surplus in cash because they just changed the way they looked at money and spent their money. That's the key to during recessions. Recessions can be good for that reason. It allows you to reevaluate. It allows you to sit there and say, what was I doing wrong? That's a positive recession. Nobody wants recessions, but guess what? Nobody wants to get the flu, but we're all going to get the flu at some point. We're all going to get sick at some point. It's a good time to recharge and rest and figure out what you're going to do next, okay? As for tomorrow morning, they're going to announce earnings, and watch our channel. We're going to have a video coming out very early on, around 9:30. It's going to talk about the GDP numbers for the second quarter. Technically, if we have a drop in GDP, another contraction like we did the first quarter, that's the technical definition of recession. Now, I know the White House conveniently is now saying they don't care if that happens. It's still not a recession. I get their point. I don't care what the politics involved. I get it. They'd be like, how can we have a recession when we have under 4% unemployment rate and we still have job growth? I don't get this. Understand completely. I understand that 100%. And the other thing is, I think our GDP was artificially inflated by the government issuing out checks. All right, it's just no different than a company like that was making money off COVID vaccinations. That's not going to stay there forever. It can't stay there forever. But when they try to tell me that this, and by the way, we've also seen gas prices start to fall. That's not being talked about enough. Gas prices are starting to fall. And the benefit of recessions is gas prices will plummet because there'll be less demand for oil, drive down prices, etc. But But the best way to fight gas prices is to call your local congressman and encourage lower taxes on oil and gas. I say that because Tim's in the background here. We just believe in low taxes for everybody. No matter how much money or how little money you make, we believe in low taxes. But back to it. The 0.75% interest rate will absolutely cost you more money as you borrow all that is saying to banks, we're going to charge you X to borrow from us. Well, if banks are borrowing from the government at 3% versus 0, they got to charge you a lot more money in order to make money, correct? That's all that's going to happen. You've seen home prices. You've seen home interest rates. They've skyrocketed. A year and a half ago, my rate on my home was 2.9%. I sold that house, and I just bought a new house on Friday. I locked in my rate today. Exact same mortgage, exact same terms, 4.25%. The average 30-year fixed is 5.8 or something like that, when it was 2.7 just a year ago. That's the key here, guys. Raising rates causes everybody's borrowing to go up. When there's higher borrowing costs, businesses can borrow less, they can expand less, and it's a trickle down all the way through the economy. This isn't necessarily a bad thing. Don't look at it as fear. Look at it as a way to prepare yourself for these things to happen. Some of the best companies in history have started because of recessions. People lose their jobs, they start companies at times. If that's not you, that's not you. If you think I'm talking from this high, this high banister of looking down on everybody, I'm not. I'm just telling you, this is what successful people do. They look for opportunity in these situations. I personally believe that Jerome Powell is very, very happy about raising rates. He wanted to do this from years ago when Trump was in office and he got bullied into keeping rates low. Powell's happy to raise rates, and now he has inflation as an excuse to do so. I'm happy rates are going up. We can't keep rates at 0%. Look what it did with the bubbles. Real estate and stocks were amazing bubbles. We're not even close to done on the stock market yet. I read an article the other day on Market Watch, in all likelihood, June 16th is our bottom. I was like, okay, very well could be. But if you look at history, 95% chance that's not the case. That's just the way I look at it. So 0.75% increase. They've said they're going to do more. Now people are calling for 2023 and decrease of rates. I have no idea. Your job is to make good decisions that can go for a long period of time. Don't ask questions on week to week, month to month, day to day things. Worry about the long run. Use the opportunities that are given from a recession with the stock market falling and everything like that to make your life better by buying more assets at cheap prices. So if you're new to this channel, I'm Paul. I'm a value investor. I don't like looking at day-to-day market gyrations. I still watch it, but I don't make decisions based on that. I make my decisions based on long-term prospects in a business, the fundamentals. I know that every investment is the present value of all future cash flow, and the more I learn about that, the less I'll fear it. Stocks and companies are a very different thing. You can have a great company with a bad stock, and you can have a bad company with a great stock. Thank you very much for listening. If you like what you hear, please like and subscribe to our channel. Thank you very much.